everyone was kind of confused. Like, I thought lower rates were better for assets. But if you take a closer look at where the money market funds are moving their capital, you realize it might not be good for dollar liquidity. And you're like, okay, interesting. Well, let's watch the 10-year. Because last time the markets were upset about dollar liquidity, when the 10-year got close to 5%, Janet Yellen turned a $20,000 Bitcoin to a $70,000 Bitcoin in 6 months. So let's see. If something goes down, is she going to turn a $70,000 Bitcoin into a $400,000 Bitcoin? I think so.
Zap CEO Jack Mallers shares exciting news about Bitcoin and how it reacts to interest rates. Lower rates are usually great for assets, and this is a perfect chance for Bitcoin to grow as an asset. He notes that when people worried about dollar liquidity before, the 10-year Treasury bond rate hit almost 5%, and Bitcoin shot up from $20,000 to $70,000 in just 6 months. Mallers believes that Bitcoin is on track to soar from $70,000 to $400,000. And it's only a matter of time before that time comes. Stay until the end of the video to hear Jack Mallers as he reveals more details of this prediction. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Jack Mallers on Bitcoin and rates cut.
Interesting thing about the bond market is the market will punish the monetary authorities if they don't fix things themselves. That's been the most interesting thing for me. You know, once Treasury hit 5%, was it? When did Yellen come down and say, I've had enough and I need to fix this? I think Treasury's hit 5%. So, but the point is, like, the market will punish monetary authorities if they don't address and fix the issues at hand. And so there are levels at which Yellen has tapped out and said, I had enough. We can't sustain, levels of 5%. Like if yields were to get 5, 6, 7, 8, 9, 10%, where the market demands, if the US economy is growing at 10% and the market's going to demand, I want that 10% growth returned, and they can't afford that. And so I think there's always been the main takeaway is in watching the bond market is basically, if Yellen and Powell aren't going to do their jobs, then the market's going to force their hand on it. It's been that way for years now in this kind of like post-COVID era, right? But let me give you an example. So you've got zero interest rates, biggest asset bubble like ever, right? COVID era, highest inflation in American history. And then the Fed now is told by the government, you got to fix this shit now. It's making us look bad. So fastest rate hike ever. Arguably, the Fed should have kept raising rates because they still haven't hit their inflation target, right? Target 2%, we're still at 3%. So why did the Fed stop? Why didn't they raise rates to 6%, 7%, 8%, 9%, 10%? Now, the reason is that would have broken a lot of other things. But the point is the Fed paused their hiking in 2023. As soon as the Fed paused, then the 10-year went skyrocketing high, is my point, Dad. And so the point is, if the Fed won't tighten conditions, then the market will, right? That's like the market is saying, fuck you. We want rates higher. And then I think is when Yellen stepped in and said 5% 10-year Treasury, like, we can't sustain that. And that was the recent bull run, was when she stepped in late 2023, when the 10-year hit 5%. And she came in, gave a bunch of liquidity. And that was when Bitcoin ripped from like Q4 in 2023 through Q1 of 2024 of this year. Bitcoin went from 20,000 to 60, 70,000 or whatever, right? And then, I don't know. So I think we'll see. Like, if the Fed and Yellen don't do their job, then the markets will tighten conditions for them. And who knows? The first market cycle that we were in, Bitcoin went from 1,200 to 200 over 3 years or something like that. That was a wear you out and a scare you out. I am more convinced that as the asset matures and as time goes on, it becomes easier. There's less volatility. The wear you outs and scare you outs aren't nearly as nauseating and threatening, but there's probably going to be diminishing returns and lesser upside. Obviously, buying Bitcoin 10 years ago, it gives you better returns than buying it 5 years ago. When I first got into Bitcoin, shortly after my dad did, dollar bill did, was Mt. Gox fiasco and the hack. And that was that bear market for everyone, by the way. So that was late 2013 when Gox got hacked and Bitcoin fell from 1200, I think it was, 1180 the lie or something, all the way down to, it was late 2013 was the high. And then I think it was it 2015 or 2016 was the low? So it was a multi-year bear market where Bitcoin went from 1200 to like 200. And I might be off by, a couple dozen bucks or something like that. And I remember running up to my dad's bedroom in the house. My room was on the first floor. My dad's room was on the second floor. I remember running upstairs and being like, is it over? Should we get into something else? Which, by the way, goes to show, like, no one's born understanding Bitcoin. I've been on my own Bitcoin journey just like everybody else has. And I was like, is it over? What do we do now? And he was buying the dip. And he was like, is it over? This is where we build a real position. I couldn't get a lot of Bitcoin when Bitcoin was at 1200, but if they're going to sell them to me at 200, we got to keep buying. And that was my first, that was before buy the dip was a meme. I'll never forget that, obviously. And that was a legend in the making, buying the Mt. Gox dip long before ETFs or Sailor or any of that. My dad was sitting in a suburb outside of Chicago buying the Mt. Gox fucking dip from 2013 to 2015 or 16. It was 16, I think, 2016 halving. And another story of that year, and then we'll move on. 2016, Bitcoin bottoms out. I was in a group chat with about a dozen of my buddies that I grew up with, still in the group chat. And I texted them and I was like, hey guys, here's an idea. Let's all buy one Bitcoin. It's like a couple $100. And I think it's going to go up a lot. And if it does for New Year's, then we'll have like the coolest New Year's ever. We were like 21 or 20. I don't even remember how old we were. It's like, we'll have the coolest New Year's ever. We'll all have like made multiples of returns. We'll be able to actually afford stuff. And if not, who cares? Because we're going to be hanging out in someone's basement anyway. So what's the real risk we're taking as kids? And nobody listened to me. But Bitcoin rallied from $200 that year to, I'll never forget, it closed on January 1st, 2017. So on New Year's, it hit 1,000. And then 2017 was the famed year where it traded from 1,000 to 20,000 in 12 months. But that bear market bottom was 200, top was 20,000. So that was a 100x on your capital if you were in my childhood group chat. Fundamentally, I hope the takeaway is gold became demonetized when the world and society needed a money that could scale further and faster than your local economy. If you wanted to use gold-backed notes or gold coins to go to your local grocer and your local butcher and your local tailor, that's fine. But if you needed to move money across borders, across the internet, across towns, across countries, then gold needs trust, right? You cannot physically move the gold in an untrusted way. You need to trust your government. You need to trust your banks. You need to trust corporations. And that's when gold became demonetized. And it's not only the fact that you need trust to move the gold, but because you need trust to move the gold, then the concentration of the gold supply is with government, is with banks, which then also doesn't allow it to operate in a truly free market in price discovery. So if government and central banks own all of the gold and you need to trust them in order to be using it as money in the 21st century, then that's when you get demonetization, a divorce from the gold standard. So gold is fine if you're operating an economy of a couple hundred people in a small town in the year 1700. But gold doesn't work as money in the year 2024. And so contrast that and think about what Bitcoin's actually achieved. Bitcoin is not only scarcer, more divisible, more portable, easier to verify, more saleable, but it's able to achieve the properties of money without trust. That's fundamentally what we're talking about here. Like, what did Satoshi Nakamoto say at the end of the day? If trust is required, all these properties are lost. That's what happened with gold. So that was my hopeful takeaway, is that I don't dislike gold. And my approach going into it was, I'm not going to get in a shouting match with Peter. I know they're not going to let me talk a lot. I know he's going to be rude. I mean, I grew up watching his stuff. So I'm going to be polite. I didn't know that they were going to be filming me while he was talking, or else I would have stared at the camera. But he just talks so much, and he says the same shit. I mean, I was checking football scores. I was texting my friends. I mean, I've heard the same shit. So I wasn't trying to be disrespectful. Everyone always speculates that I do drugs or something. I've never actually, speaking of my childhood, I was the only kid in high school that never tried any drugs outside of marijuana. It's the only drug I've tried. But I just heard the same shit. I told myself, I'm going to be polite. I'm going to be straight. I'm going to be kind. I'm going to be sincere. I know I'm not going to talk a lot. I know he's going to interrupt me. I know it's going to be rude, but hopefully I can educate some new people, and it's a scrapbook moment for me. I don't know. I think the takeaway is pretty clear. Like, the main messaging, I think people understand. He doesn't bring any new arguments. It was fun. I don't know, like, if I'd do it again tomorrow, though. And I wasn't trying to be rude while he was talking. Usually in these things, if you're not talking, then they're not filming you. You know, the guy's talking for 15 minutes straight. I don't know why the camera's on me. I'm not going to sit here and stare at the camera. Seriously, it's like, I think there was an NFL game on, I think. I was like, I don't have time for this. Like, he's sitting here saying the most nonsensical stuff. So whatever. Anyway, I digress. I wonder what you guys think about it. Listen, like, I know Sailor and I disagree on this slightly. Like, Sailor, Peter doesn't own a lot of gold, by the way. I think 5% of his portfolio is gold. So he's 95% short gold. By the way, 100% of my liquid capital is in Bitcoin, right? So Sailor's point is, you can't even
called shift gold or something, isn't he?
Yeah, but his point is, gold is money, and I compare gold to the euro, to the dollar. Everything else is an investment. So I'll invest a lot of my capital, and my money is stored in gold instead of the dollar. But it's like, yeah, but everything is up against the dollar. This microphone is up against the dollar. So saying gold is outperforming the dollar is nonsensical and stupid. This mouse is better than the dollar. This water bottle is more expensive this year, last year, because it's priced in dollars. So, like, that's not a real thing. But yeah, he's short gold with all the other shit he owns. He owns stocks. He owns real estate. He owns all sorts of shit that's short gold. So Sailor's point is, you can't take the guy seriously. He's not even long and convicted on the thing that he's shilling. And I agree. But where I think Sailor and I agree is that, at the end of the day, arguably the best use of your time is educating people on Bitcoin. The difference between the world we live in right now and a far better world is more people understanding money and understanding Bitcoin.
Jack Mallers reveals his views on Bitcoin compared to gold, noting that while some, like Michael Saylor, see gold as a form of money, he sees it differently. Mallers points out that Saylor only has about 5% of his portfolio in gold, meaning he's mostly betting against it. In contrast, Mallers has all his liquid capital in Bitcoin, which he believes is the better option. He believes the key to a better future lies in educating more people about money and Bitcoin. By spreading awareness about Bitcoin, we can help create a world where people understand its value and potential. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.